With an increasing scarcity of defensive assets that look attractive and investors moving down the capital structure to earn yield, our focus remains on our objectives. Against this backdrop, we maintain our defensive positioning and continue reallocating away from risk assets. We remain biased to quality fixed income securities as well as defensive equity income assets such as our position in dividend-paying stocks in Asia. We are not adding further to Asian high-yield bonds, but this remains a key area of conviction for us, and we have rotated some exposure from hard currency to local currency emerging market debt and Chinese government bonds. To hedge out some of the currency risk in our emerging markets exposure, typically a major contributor to volatility for emerging market fixed income, we are using a position in the Japanese yen, given emerging market currency hedges are increasingly expensive. With positive yielding duration assets like US Treasuries at expensive levels, we are using our global mandate and leveraging the depth of the resources from across Fidelity, working to uncover sources of natural yield. While some areas of fixed income, such as US high yield, have benefited from the reach for yield and performed strongly, we believe that investors ignore fundamentals at their peril. All of our investment decisions are made with an acute focus on the risk-reward profile. And in this late cycle environment, we remain mindful of fundamentals and will not view any asset class as attractive based on its yield characteristics in isolation. Financial stocks tend to benefit from a rising rate environment, but we have seen the opposite take place in recent months as global central banks return to dovishness. That said, we tend to think of financial stocks as taper tantrum insurance, effectively a hedge against the risk of central banks hitting markets with a hawkish surprise or inflation coming in higher than expected. We prefer a globally diversified allocation to financials rather than just allocating to the United States, with a focus on insurance companies and not just deposit-taking institutions.